Ladies and gentlemen, welcome back to Finstep Asia Edge. Today with me, I have a very special guest, a friend, if I may call her that now as well, someone who's been very inspirational and somebody I've learned a lot from, Theodora Lau. She is the founder of Unconventional Ventures, and she is a top knowledge person. She is been named by the American bankers as the top 20 women in FinTech, among many other accolades that she has. She's visiting Hong Kong for the summer holidays, having been born and brought up in Hong Kong.
Yes.
So welcome, Theo. Welcome back home, as it were.
Yeah. Thank you for having me. And yes, absolutely. A friend that we met online first, right?
Online first, yes.
Yes. And then in real life and shared meals and everything else. So,
discussed so much. Started with a discussion on Indian fintech and Chinese fintech to now.
That was a while ago, wasn't it?
It was a while ago when you were kind enough to have me on your podcast.
Yes. Much has changed.
Much has changed. Mm-hmm. Yeah, it has. So Theo, a lot is, you speak on a great deal of very important topics, ranging from, broadly on fintech. You do bring in great insights on use of artificial intelligence in today's world, but we don't often hear about your story. So I want to start with an understanding for our audience and for myself as well to know about how your career grew and how you got into this world of technology enabling finance and now moving towards the sharp end of artificial intelligence, rewiring finance, if I may say that.
Yeah. Oh, I might have to borrow that.
Please,
My story is very boring. As you mentioned, I was born and raised in Hong Kong, grew up here and moved to the US when I was age 18. I never thought I would be doing what I'm doing right now. Absolutely not. For any of you who are watching who understand how traditional Chinese dynamics work, right? Sure. As far as expectations, you can be an engineer, you're a doctor, a lawyer, pretty much it. Didn't fit any of those. When I was in high school, I wanted to be a geologist.
Okay.
That's nice. It. I am going to be a geologist. I got accepted into a liberal arts college in Pennsylvania. I got my dorm room assigned. I had my email address assigned. Everything was all set. As the story goes, it was also my last year, let's say, in an all-girls Catholic school where expectations are set, where the teachers actually knew my father.
Okay.
And it's one of those, I was so busy doing everything except studying, I flunked my physics. Ooh, yeah, that was really, really bad. And my physics teacher was very upset with me. And he called me out in the class in front of everyone. You will never, ever be an engineer because you flunked your physics. Now, anyone who knows me knows that do not tell Theo what she cannot do because I would go out and prove that you were wrong. And I did. I switched college before the semester started. I ended up in RPI, an all engineering school, enrolled in chemical engineering. Did all 4 years, technically speaking 3.5 because I ended up co-oping with the rest. I got straight A's in my physics, 1, 2, 3. Wow. Went back to my Catholic school. Told my teacher I aced all my physics. Got advanced credit for calculus. All of those. End of story. I did it. I graduated, and I started my career as an engineer.
Nice.
That was end of story. So I thought. And fast forward, I spent 15, almost 20 years in telco. Built systems, tear systems down, do a lot of IT, engineering, API work, and trying to, in a lot of ways, if you think about telco and banking, there are a lot of similarities. Regulated industries, old system, legacy systems, many copies of customers' data everywhere, and trying to get a grasp of it and modernize the systems. That's what I was doing. And then I had children. Children happen. Children do happen. And I couldn't come back to work. And as surprising as it was, people would look at you like, can you actually work? Of course I could. I didn't have, I didn't suffer any trauma or anything. But I got asked many times, can you still do what you used to do? Nobody asked the father that, but of course they always asked the mother. To the point I had a lot of difficulty trying to find work to do. When I did find a job, I had to take a
Wow, okay.
And it hurts. That was my lesson number one, actually, too. And then, as luck would have it, a friend of mine, he was in nonprofit.
Okay.
And they were needing someone to work on creating an ecosystem that look at technology innovation for older adults. And I said, hey, why not? So I started my journey at a nonprofit in DC.
Okay.
And then switched over from looking at an ecosystem development for health tech to ecosystem development for financial services. Because we can't get old and lead a secure financial life and expect to have your health and everything else in place. Money is the bottom of everything. It is the number one thing you need to have, financial security, before you can tell people, hey, you need to eat healthy, you need to live healthy, you need to exercise, you need to do all these things. You can't think about that if you can't make it ends meet.
Yeah.
So that was my story.
And you've now had, many years looking at that digital evolution of finance. What has been, probably to start with, what surprised you when you started looking at digital finance or technology enabling finance in the early days, and how have you seen that evolve? Maybe that would be good to understand. Yeah.
I think the first thing that surprised me, now backdrop, right? My perspective starting out was looking at how can we use technology coupled with money, create a better life for consumers. So I was always looking from consumer lens. I think the first thing that surprised me the most was when I started off that journey and saying, hey, we have a growing number of older adults that are getting into later years that lack financial security.
Fair.
We have all of these technology in place. We should be able to do something better. Let's get together and do something better. The first surprise that caught me, and it still surprised me, is people are like, we're not interested in old people. And that sense is so very much prevalent when you're thinking about technology innovation. Immediately, people think about, well, my grandparents or my great-grandparents. You think about people who they thought are resistant to change, that don't want to use anything different than what they've done in their entire lives.
Yeah.
Right? And so for them, they're like, we don't want to do anything for them because we can't relate. And then you bring to banks and a lot of the institutions, they say, well, but this is the demographics that are decumulating. I want to approach, the younger generation who needs, credits, who are accumulating, who's going to spend the next, 30, 40 years with us. I don't want to waste my time. So there's still a lot of that sense of bias. Why do we need to do anything for them? But I think what I hope we had learned the last few years, especially with COVID, especially with so many people having to stay in place, and then transitioning over to using tech. For example, during that period, I think PayPal realized that the fastest growing demographics of the user group were people older than 55, right? And so I hope that eventually we can see two things. One is people are actually not as resistant to change as we perceive they are. But second of all is if you have a solution that can bring value to people will use it.
Fair.
Right? So it's a matter of question is how good do you understand the people that you're serving? What are their pain points and what can you do for them?
I think the biggest challenge I've seen in the space, and I've looked at the silver economy as it's tagged in association with or in culmination along with longevity economy, is this very fact where a lot of startups and even technology firms tend to focus on the younger end of the spectrum, largely because, as you mentioned, accumulators and all of that stuff. However, as is known statistically, vast majority of wealth is held by those who are 55 plus or etc. Right? And given now the OECD expected lifespan is over 80, if I'm correct. I think it's actually mid-80s, somewhere there. Hong Kong is about 89 for women, 87 for men, I think. US is mid-80s as well. Quite a few countries are at that stage. is no longer a question of it's not 10 years that you're looking to do it, and these people are going to retain, hold on to a lot of their wealth, and the transition of wealth is longer. But more so, what I have experienced in the last 10 years is being among the older millennials, as it were, and giving away my age, that the Gen Z have a very, very different approach to money and services and everything else. So now these startups have to build separately. And typically, a lot of the younger generation are not as loyal because they switch. Allegiance is easy to switch, but also once they get bored of whatever feature, they're like, yeah, what are you offering me? Whereas the older generation takes time to get on board, but tend to be more loyal and more sticky. And these are things I feel some of the reasons behind this with the chase to add users to your user base, or increasing the user base was a key performance metric for many VCs when they were judging versus profitability. And probably post COVID, now where the focus is back on profitability, I do hope that we can see a change in how these services are delivered. But so that's one piece where you mentioned about the service to the silver economy and how it's still lacking significantly. What about the rest of it? Right? What have you seen which impressed you about technology and finance? Let's touch on that. There are a few things that finance has not been all that bad. Yeah.
No, it hasn't, and I think, and it's human nature, and I do fall into the same trap. Is as you go about your daily lives, typically we think about things that are not working.
Yeah.
And we got hung up on things that are challenging. We forgot, things have changed and things have gotten better. And we need to embrace that and see how we can carry that forward to create even more positive momentum.
Sure.
So think about, as we talked right before the recording, we think about how prevalent a lot of the things that we've been doing with payments are.
Yeah.
They're still pain points. But now I can ride a taxi with, cashless or with cash if you want to. There's still options. We can get a car while you're walking down the street, ride hail. It's much easier. You can pay for meals, splits, and all of those much easier. You can order things. Everything is convenient, but also to meeting you where you need it and when you need it, right? So that has changed, and that is still changing and blossoming. What I love, though, is, and I think that space is still evolving, and I shared the story of my recent trip to Tokyo, where I just saw, I lost count, 30, 40 different payment options. And okay, this from someone coming from the US was absolutely overwhelming. I'm like, I don't know half of these logos, and this is just dizzying. Why can't I just pay and tap and be done with it? But I think that also points to how rich the ecosystem is in Asia, right? And how we tend to forget, this is Asia, and we lump everything in one block. And I still remember this, the first time we talked, quite a few years ago. You reminded me how many countries there are in Asia and Southeast Asia. It's so rich and diverse in culture and history and the way we live and all of that. We tend to forget that. But now you see that proliferating in payment space. And the next development I'm seeing is ecosystem being built or tech players bringing them together and creating value, making cross-border easier, making it easier for merchants and travelers and the like. And that is a wonderful, wonderful step that I would love to see more. It's something that I don't think we appreciate enough, coming from the West, where everything is established, as you know, right? You have these things and this is how we're doing it. And we're still writing checks, by the way.
I was going to come to that, and I'll come back to the ecosystem piece in a bit, or maybe we'll do the ecosystem piece first, right? It's very fascinating, and I've seen in the last few years what's happened is you had the ecosystem development from a largely driven by large big techs, starting with Ant and WeChat or Tencent, then the Japanese conglomerates, and then you saw the same story extend in Southeast Asia and in India, where it wasn't just a case of one simple service of just payments. Now it is a lot of ecosystem, and there are these big super apps that have successfully built themselves across Asia. What we are now seeing is as the geopolitics have evolved and changed over COVID, without going into the geopolitics itself, you are now seeing a switch where the central banks and the regulators are now getting more involved, despite the geopolitics, and actually trying to figure out ways for connecting cross-border, right? So Project Nexus, which the BIS Innovation Hub and MAS are building towards unification of or easy cross-border payments for the fast payment systems in Southeast Asia, plus as an extension into South Asia with India. You are seeing that Hong Kong has been doing that with Thailand and now looking to expand that into mainland. You notice that flip that's happened where quite a bit of it was largely in silos and being driven by private organizations. But as things have evolved, you are seeing the regulators now realizing the value of interconnectivity, and hence you have the 40 logos in Japan, which probably half of them are from international players, and it's easier because I always say this. Many times it is not the technology or technological capability which is a challenge when it comes to implementation of financial technology or payments rail, etc. It all boils down to adoption by the local regulators or by the enterprises and the regulations that enable them, right? And the classic case, and now I'm drawing back and coming to you on the point about the US, which is it baffles most of us, I would say, outside of the US, when we look in and you see Silicon Valley being the leader when it comes to innovation, creativity in all fields, including in finance, like Venmo, etc., is over a decade or more older, right? Google Pay, etc., is coming out of the US. However, there seems to be this dichotomy that exists in the US where a lot of people still prefer paper, and I'm using the term paper rather than cash because, as you rightly said, so many checks that are still issued.
Yes.
I was having an argument with my set-top box provider in India where we've ended our contract, and they're like, okay, return the set-top box, and to get your deposit, send a copy of your check, right? And I'm like, I haven't used a check in years, so I don't even have a checkbook. And they're like, no, we need that for your bank information. I'm like, this is archaic. But largely in the US, this would not be an issue, I would imagine.
Absolutely not.
Why is this the case? What is your sense of having been there at the heart of all of it? You're close to the policy, heart of where the policies are made in DC. What do you think it is? Is it the policies? Is it the people? Is it trust? What is it?
I don't think it's the people.
Okay.
I think it is very much a technology problem or challenge that can be solved, but it's hard to solve when you have a lot of systems that's been there for a long time.
Sure.
That you kind of need to update, right? So it becomes a thing where when you have so much tech debt, where do you start?
Sure.
And the joke always is no one wants to be the bank CEO that end up bringing their bank to losing money because they have to spend so much money upgrading the system, or having this sort of hiccup that become the headline on Wall Street Journal. So they always thought, well, if we can do enough to patch, and then we'll wait for the next guy to do it. And fortunately, the next guy thinks the same thing.
Yeah.
It is a complex problem, and the funny thing is, I don't like checks. I dislike checks, but I have to write a check all the time because that's the only way I can move money from my personal account to my small business account, both under the same bank, by the way, and vice versa.
You can't do online transfers?
I cannot do online transfer, not with my small business account to my personal account under the same bank. Now, with that being said, what is really, really interesting and what got me so excited with Apple last year was that I'm a huge Apple fan. So this is the
Apple and Star Wars, I mentioned. Yeah.
Apple and Star Wars and Lego. And F1. Okay, now we have all of that. Yeah, exactly. This is my circle. But I've had Apple credit card for a while when it first came out. I was like, wow, this is really cool. I love the experience, and people are making fun of me. They're like, Theo, go to use your app. Why are you using an actual card? I'm like, oh, I really like that. And I used that card the first time in Tokyo. This was back before COVID, and people looked at it like, this is really cool. Anyway, back to my story. When Apple Savings was first announced, I'm like, well, yeah, it's another savings account, but I'm really curious how this works. I signed up right away the minute when it was available. And I remember I was doing this in the living room. My son was sitting across from me. Within a minute, perhaps even less, I was able to open the account. Just a few steps. It was done. I was so happy. I'm like, oh, this is cool. But that apparently was not the cool part. The cool part was I was able to get money from my small business account under the big bank to my Apple account instantly with a few clicks. And there, I'm like, wait, I cannot do this with my personal savings account under that bank, but I'm able to do that and transfer out to Apple Savings. And on top of it, interest rate was 5%, right? The other one was 0.01% or something. And I blurted out instantly, I'm like, why would anyone keep an account, right, with their traditional Main Street bank? And my son was watching me the whole time. He said, yeah, who needs a bank? Exclamation mark, right? Yeah. And you think about, why do people have bank accounts? Why does financial services exist to begin with? Help us move money, help us pay the bills, help us do all these things so that we can get on with our daily lives, right? And a savings account is not sexy, it's not interesting, but what it enabled us to do to move money between my work life and my personal life, that's important. And
the storage and the movement, right? There's two things that you look at. So you mentioned an important piece about the bank CEOs who are like, okay, I need to focus on the bottom line. If I go into a transformation project, this is going to cost XYZ $1 billion, and that's going to hurt my remuneration. But the strange thing is, again, the US, the major banks, their CEOs tend to last for a pretty long time, right? Like, I started my career trading in the mid 2000s, 2005 to be precise, almost to the day, July 18th, 2005. And within a few years, it was, when we were looking at the major bank CEOs, Jamie Dimon was already JP Morgan CEO, and he still is, by the way, right? And it's a similar story with a few others, like Dan Monahan has been there for 10 years. Okay, you've seen a bit of change in Goldman, but largely they tend to be stable. Similar with the regional banks as well. There's the stability in there, and so is it more of a collective will to really push the needle, or are the regulators not doing enough? And this is not me wanting to pan the Fed. They have a lot more to look at as such, or maybe this is the problem where you have, I don't know, 6, 8, 9, 10 different regulators in the US. I can't even place my finger on which all could cover this particular piece of digital technology. Because you had a situation in Hong Kong where probably was very similar 7, 8 years ago, right? As I was running the FinTech Association of Hong Kong, and FinTech companies would be sending me checks for their membership. I'm like, are you serious? And they're like, no, because we are not charged for online. We are charged for online payments, but for check payments, we're not charged. And that's like a $50 charge to use online facilities. And I'm like, yeah, the bank is the check person, etc. Probably works on much more, but that was the situation. And banks were very profitable. They didn't really need to push the needle. The populace as such did not necessarily trust digital financial services. They did a lot online. I mean, over 2.3 phones per person here in Hong Kong, right? So high mobile penetration. But then when the HKMA came in and said, look, we want to increase financial inclusion for SMEs, but we also want to digitize and change things, you then saw this move where some of them got into becoming neobanks, and the big banks then upped their game on digital banks. They cut out all of these low balance fees, blah, blah, blah. And now when I do FPS payments, I'm not charged anything at all for local payments, especially ones below 10,000 Hong Kong dollars, which is roughly $1,200 US, right? So this push by the HKMA, and that's what I was coming to, was very important in moving highly profitable banks with a latent consumer base into becoming, now you have over 13 million FPS accounts in Hong Kong, which is two for every resident almost, right? And most of the banks, even the big banks, now claim to be digital banks because they have pretty good apps as such. So is it a matter of the Fed doing more? I know the Fed now, or Fed Pay, as it were, their real-time payments in the US has just come into play recently after most of the world is already looking to integrate in cross-border. Is it that? Is it a challenge with regulators, or are they not wanting to push things into digital?
I think it's is all of the above.
Okay.
I think this ecosystem is so complex and so large that it needs all the parties to work together.
Yeah.
And also the interesting thing you mentioned, financial inclusion, right? Digital penetration. If I remember, I'm not as up to date with the figures anymore, but in Hong Kong, the mobile penetration is up in 99 or over 100.
It's over 100. It's right? Over 200. It's 220%. Yeah.
It's crazy. So practically everyone have access to some sort of digital services.
Correct.
That's not the case in the US. Yeah. So in the US, there's still, I believe, if you look at financial inclusion, access to digital accounts and all of those and the underbanked, unbanked, I think it still hovers around 80-some%. So there's still a good chunk of people,
60 million plus, right? Or at least 50 million plus,
who don't have access to formal financial services, who don't, and then another chunk who don't have access to internet. And for that particular demographics, using data on mobile services is highly expensive. So there's a lot of, cost factor, access to services, as well as everything else, which is not easy. During COVID time, when the government was dispensing aid, right, it was still done in checks. Right. And it was precisely because of that, because there's a big chunk of population who don't have the means to otherwise do anything else. That's why you have the check cashing services.
Fair, you need that. You had the same situation on the flip side in China, and you've seen that in the Nordics as well, where the population of over 90% of the population was digital only, and then a small percentage who didn't have access or are not comfortable with digital, etc., wanted to use cash, but cash was not being accepted, right? So the regulators had to come up and say, mandate that you have to accept cash. You can't reject cash, right? Sweden did that. China did that as well. But I hear where it is. So you need to have financial inclusion for all. It can't just be on one side. So, okay, that gives me a good perspective. And I don't want to go into the politics of it or policy side of things, where you have seen in Asia, places like in India, where we built the India Stack, which is a digital stack infrastructure by the government to essentially bring in hundreds of millions of people into the financial system, right?
That's impressive.
Yeah, there were 500 million accounts that were opened for people who did not have bank accounts. And then now you did the biometric, which is 1.2 billion people. So the key element here is it was in India, which was still an emerging market. It was still not in the top 10 economies in the world. Per capita still is hovering around $2,000, right? Whereas you're talking about 60, 70,000 per capita in the US. And so it fascinates me how policy works and how it can be implemented. But I won't get into those details. What I would rather ask you is, how do you think, given the realities of what it is, right, in the US, can there be a change towards more digital financial inclusion and move away from things like checks, etc., in a way that it's effective and ensures its inclusion? Do you see a pathway there in the near to medium term, or you feel it's going to take a while?
I think it will take some time. It can be done, right? So look at, for example, Brazil. Look at Pix. They have done an amazing.
Correct. Closer to home for you,
right?
Yeah.
Look at success story. It can be done. I think there Here's one of the other challenges, right? So earlier you talked about trust.
Yeah.
Trust is a big thing, and you looked at the challenges in the recent month with business as a service. With,
Sure.
Practically some of the elements were melting down, and customers losing access to their funds. If I were a consumer, right, and I'm looking at this, if I'm just reading the headlines,
Fair.
I thought the service is so great, they said it's FDIC insured, and I trusted, I have my $6,000 in there and whatnot, and now my fund is frozen. I can't pay my rent. I can't do all these things. And what would you do? You would go down to the street and find a Main Street bank,
correct,
right, and open an account, because that's normal reaction.
Yeah.
And I think that will hurt the sector, not for a long time, but at least immediately. I think it will, unless we can resolve that quickly. Yeah. It will have an impact on the industry. And I think it really, really does take time. It's funny. I was chatting with someone a month ago, and we were talking about financial inclusion, and she said something really interesting. She said, "Theo, financial inclusion doesn't always have to be digital." Yeah. She said, as long as it is a means for people that they have access to, that enable them to do what they need to do in a fair manner, that's financial inclusion, right? So, right now it is absolutely not the case, because, you'll have a segment of people who have to pay extra money to cash their payments. You have to pay extra money to transfer, right? Remittance across the border is still something that we have not completely solved. Yeah. So we're not there yet, but I think it is a good time to remind ourselves that A, this takes time, and B, it doesn't always take the shape that Silicon Valley innovators would think they do, because that is a different bubble.
Okay. I'm going to kind of ask a question that helps transition to the next stage of the conversation, which is on artificial intelligence, right? And I'm going to start with the use of artificial intelligence has evolved. It's not new. A lot of people are jumping up thinking it's new. It's been around for decades, in use in financial services. Yeah. Right. But just focusing on the use of Gen AI, or even anything else broadly, machine learning, etc. Do you see it as an enabler for broader digital finance inclusion in the coming years? In the US, let's start with that, and then we'll go into the broader conversation of artificial intelligence in the grander scheme of things.
It's an interesting question. So let's back up. I don't know if everyone knows this who are watching, but
go for it.
One of the most important use cases of AI in banking was actually to enable us to read the check. Going back to checks, right? We're going back in full cycle. So the ability to basically recognize the digits, and know that you write 1,000 means 1,000 in the check, that is by itself machine learning. So that's one of the earlier use cases of the technology within financial services system. And then, obviously has been used, as you mentioned, for a while in back end office automation and, fraud, in a lot of different things. The reason why it's been such a hype, if you will, is because of ChatGPT, right? Yeah. The ability for regular people, consumers, to actually touch and feel and play with it. This was back in October 2022. And since then, it's just been crazy, chaotic, and hectic, and I would say a little bit risky. And I say it, this is what I remember on stage in London back in 2023, early part of it, when this was like, everyone was talking about it in every single conference, right? And I said, well, it is an interesting technology, but what I was not happy with is it was released in a way with a asterisk caveat. Hey, this is still beta. Almost feels like it's absorbing the tech company from if anything happens, it's not our fault. That was, we did say it is not official. But damage is done, because what that has triggered is it has triggered an arms race. Everyone jumping into it, everyone rushing to develop something, and having a technology that is interesting, but not for a public that is well educated, as with the limits of it. It became a tool that bad actors have used and have been using, creating more chaos and creating more fraud. It has been used in a way that is creating chaos in other aspects of our lives, without, again, enough thinking about what if or what we could have. And it was done in such a manner like, well, let's just throw it in the wall and see what sticks. And that, I don't think it is a responsible thing to do. So if you bring that to financial services industry, which is highly regulated, that we're talking about people's money that we're moving. We're talking about people's livelihood that moving. It becomes a compelling contrast to what should we do, right? We need to be careful, because it is something that we need to be careful with. But if you don't move fast enough, then you'll be seen as a laggard, which is another problem.
Correct.
Right. So I think it's getting us into a situation where we're losing sight in some ways of what the technology can actually do, the good potential of it, because now we're dealing with the mess that it creates. Yeah. So this was back in, I wanted to say maybe 2015, 2016, back when I was talking about AI within the realm of personal finance. Yeah. What I was very intrigued about, and I still think it can be done, but there's too much distraction, is using AI to help us map out where we can go. So think about, navigation, GPS, right? You input, say, I want to go from, where we had lunch to where we are right now. Here's the route you navigate. If there's traffic, this is an alternate route. It gives you options. Yeah. This is something that could be done with AI, with something, with a machine that can understand your life so well, that can understand everything around your life so well, that has enough data to help you calculate a path towards not only what you need 5 years from now, but 10, 15, 20 years from now, dynamically, within all the factors that's changing around you. And I think that's where the potential of AI is promising. It's not about, whether or not it can, help me create a glossy press release, right, for a product. Okay. It's not about a lot of the things that we're doing, but actually doing something that help people, right? Okay. Get us to financial security in the long term, knowing that there are all these factors that are changing around us. If you got married, or you move, or you have extra, jobs that you're undertaking, or if something changes with your career, or you want to take a different degree, it's all about looking at options and what route you can take.
Almost like a Siri being your personal financial advisor.
Exactly, right? It is your CFO in your pocket. Yeah. And I think that's where I would get really excited, because the potential is there. Yeah. You need the compute power, which we have a lot. Sure. We need data, which we have an immense amount of data. Yeah. And I think it goes back to one of the questions we first started talking about, longevity. When we're living longer, right? We're living, look at me. I'm going to be 51 this year. My kids will be in uni in a few years. In a few years' time, in 10 years, my parents will be 90. My kids would have graduated college. I would have been 61. And so if you think about what I need to do today in 2024 to what I should be doing in the next 8 to 10 years, I will have to figure out how I can get myself to a state where I can start thinking about retirement in my 60s. I probably won't. How I can get my 2 kids through college in the US, which is immensely expensive. How I can support my parents, right, who are living in Asia, who will be at 90. Yeah. There are so many competing demands that's happening within my life right now to where I will need to be, that I cannot afford to think about it when I get there. I need to start thinking about it now.
Okay. Yeah. It's
or it's a tool.
yeah, it's a very, very valid point, right? And so I'm going to play a bit of devil's advocate to kind of say why what happened with ChatGPT has happened, and also about there's a question around responsibility and whose responsibility it is, right?
Mm-hmm.
So the first one being, and this is something I realized with fintech and other, even with crypto for that matter, a lot of people don't look at the 2018 ICO cycle in crypto as an important event, but I actually believe that's the most important event because that's when billions of dollars went into random projects or millions in each, but they also went into bigger projects, which then matured in 2020, 2021 to be more stable, more scalable, more attractive. But that investment was very useful. But at the time, a vast majority of those projects failed, but that money was useful. In the same way, when ChatGPT came in, there's a lot of this investment that went in to commoditize and enable people to use AI at scale, right? It's almost like saying, okay, Siri was always there, but now it's like everybody can use these tools, which in a usual case would be largely left to professionals or enterprises to use with certain IT teams, right? So I'm playing devil's advocate and saying that was good because it went and democratized the use of AI. And then comes the responsibility question. You had some cases a few years ago when Microsoft's AI went rogue on Twitter, right? Remember they started spewing racist and conversations as well as bad language. All of that was happening. And then they withdrew it. And then they waited for it to mature, test it out, and come out. So maybe this is and the other thing we always hear is innovators typically want to innovate or disrupt uninhibitedly, right? They want no inhibitions because they then can just think about innovation and creativity. So does that then mean, yes, you need to be responsible, completely agree on that, but are the gatekeepers needing to now, and I'm not even saying they're lagging behind or they didn't pay enough attention because this has moved way too fast. Are the gatekeepers now ready? When I mean gatekeepers, I'm not just talking about financial regulators, I'm about telco regulators and governments. EU's played some role in coming up with the AI Act a few months ago, but are the gatekeepers now in a position where they can actually regulate the use in a way that it can be consistent, plus not misleading and not harmful in 99% of the cases? Never going to be 100%, but do you think we are there yet? Also, you could counter and say that it's not their responsibility, it still lies with the innovators.
How much time do we have?
We have a few days to discuss this.
Let's peel the onion a little bit, right?
Sure.
I think the challenge with technology moving really fast and us not being able to catch up with it has always been there. It's always the case. I think the difference now is this particular technology that is immensely way more powerful than anything else we have had before. And this particular technology requires a lot of resources, not just data centers, but water, data, right? Data is a huge thing. It needs an immense amount of data and manpower, talent to run it to make it useful. And this is where I think one of the biggest challenge is. It becomes, in a way, that we're repeating the story of the internet. How internet first started. I still remember when I first went to college, I had my first laptop, which was a giant. And I got my first email. I thought, wow, that was really cool. This was back in the early 90s. When all of that started, and then Web 2 came about, the whole idea was, how can we bring people closer together? How can we facilitate information exchange faster? People have more access to knowledge. That was the premise of the internet. We all know how the story ends. We end up with the big tech who gobbled up everything. What I see with the current development with AI is following the exact same path. The ones who have billions and billions of dollars can afford to keep developing all of the technology that they need to make use of this. And all of the big technology companies who have access to data without guardrails can afford to keep developing their LLMs in a way that makes them so powerful that no one else can catch up to them. So I'll give you an example. ChatGPT, they have gobbled up so much data that they started to run out of data to train their models. Yeah. So what did they do? To develop the ability to decipher YouTube videos to get the text, so they can feed that to help them develop the latest generation of LLM. The problem is we didn't have the guardrails in place so that they don't just go and crawl through everything. Yeah. So now you have multiple issues that came up. First, they're starting to find a lot of children's pictures as well as names and identifiable information within those data models, not ChatGPT, but others as well, competitors, right? You have pictures of people from certain groups that are sensitive to having their images recreated that are now gobbled up by a different AI. Mm-hmm. Precisely because we didn't have the means to say, wait a minute, what are we doing right now? Yeah. And what can we do? What can we not do? It's basically a free for all. And so now you have EU, which I applaud them for creating EU AI Act and at least trying to put a little bit of, hey, you can play, but let's make sure we think about this. And that's why Meta stopped their rollout of Meta AI in Europe, because they're like, wait a minute, we can't do this. Brazil put a stop to it, again, on Meta AI because of their practices. What about US? Free for all. I'm all for technology innovation. I think it's important, but not at the expense of everyone else who cannot afford a voice at the table.
Fair. We need more equity in the sense of access, and I think that's the key element. And then use your capabilities to build where you are and prove your expertise. And getting access to data in today's world in general is pretty hard. And most countries have very strict data laws globally on especially private personal information.
And it goes back to the point, who owns that data, right? Do you want your data to be trained? Right now, as consumers, we don't have a say-so. Yeah. And even if, for example...
Or you're signed up and you have no clue that they're using it.
You don't know, right? And then they change the terms afterwards. And now there are companies that come out and say, well, wait a minute, we need to create a means for you to withdraw your information. Sure. But then again, I'll ask the question, that's too late because the AI is already trained with it.
Yeah, it's like telling a person, can you read something that was meant to be confidential or restricted access, can you unread it? You can't. And pull it out of the brain, right? Unless you have,
or don't use what you know. Yeah. How do you do that? Can you compartmentalize your brain?
Building stuff up. Yeah. Exactly. Agreed. Yeah. Fair comment. I want to move towards talking a little bit about the accomplished author you are. You've written a wonderful host of books. What are you working on now, and what was your last book that you'd like to share with the audience to get a sense of what they can look forward to?
I have been very lucky to be able to find someone who actually thinks that they want to publish the work.
No, this is pretty good work, so I can understand why they want to. Yeah.
Thank you. So Beyond Good was done during COVID. That was quite something. I think that one is so my heart and soul because it's one of those where when we first started writing it, we still pretty much stick along with the theme of looking at what companies are doing around the world and how we can do good and balance purpose with profit. But what we did halfway in when COVID hit was we realized that theme becomes even more important. Access to technology became more important because now all of a sudden we were hauled into our own quarters, and there were so many stories of, for example, university students who couldn't afford to continue their studies because they don't have wireless or internet access. So I think that theme became more important. The theme around inclusion and empathy and diversity became even more important nowadays against the backdrop of in the US, there's a huge movement around, unfortunately, because of certain political viewpoints that, we shouldn't really do DEI. So I think we need to even re-emphasize and double down on why it is important. Not just in what we write and what we do, but society as a whole.
Sure.
Right. Yeah. And then the second one, metaverse economy, was a fun one to write because I was a steep learning curve, my friend.
That was an interesting topic.
That was brutal. And I think that book was really interesting, and it brought something in to focus that was even sharper and even more reinforced nowadays is the regional differences with regards to what is important. So, whatever, I love spending time here, by the way. I just love spending time because of the energy and people and things that, you want to do and new ideas, right? It's always about, what can we do?
Yeah.
Instead of, we can't do, which is back home, unfortunately. So here, whenever I talk to people and say, there's like a whole new world around DeFi and Web3 and tokenization, and we're like, oh no, it's that. Oh no, it's not that. You're just in a different part of the world.
Yeah.
And do you remember back a long time ago when before iPhone? Wait, how old were you?
I'm 41, so before iPhone, I've seen the whole Nokias and
right, the Nokia phones
or Motorola phones, flip phones,
and the flip phones, right, the candy bar phones. And then with iPhone, the whole world changed. And I think we are seeing a cusp of that movement again. With technology and changing the way we think about things. This one might come a little bit later, but I think it's fascinating with what you guys and everyone is doing here in the region. And I think AI would come in as it comes in. But what am I busy doing right now? I'm busy talking.
Sure.
To people.
Thought leadership.
I have just finished a class in Oxford just because Theo was bored and I wanted to do something. That was fun, but it was painful. And I am working on a next project that hint has a lot to do with AI. I will tell people more in a few months, but I think it's just trying to bring more voices to our ecosystem.
And you're doing a fabulous job at it. Please, you should follow Unconventional Ventures and the podcast Beyond Good. Plus the newsletters that Theo puts out, a lot of thought, a lot of views that comes in from her and her understanding of both finance and tech. So Theo, it's been a pleasure having you. Thank you so much for doing this with us. And we look forward to staying in touch and listening more from you and seeing more of your books coming out soon.
Thank you so much.
Thank you. And ladies and gentlemen, stay tuned for more on the Finstep Asia podcast for thought leaders and unconventional thoughts when it comes to finance, tech, and the future of finance. Thank you. Click like, subscribe, and follow us for more of this.